Okay, quick Tuesday morning, earlier than usual, radar update. So, going to make the most of today. The sun is shining. I've got a lot. I want to reclaim the office here this morning and finish a few jobs outside. So, I'm going to run these early. We've got inside day so far. We're just at the upper end of the range in the UK. Well, we're through the opening range in the UK. DAX is pinned up against there after a torrid few days. We haven't got full data in the UK for some reason on some of these markets, so let's just, there's a bad print on not yesterday's, the day before's, Fridays. Let's just buzz through these markets. Transport still in this channel. I've taken the liberty of drawing a little breakout line, not that it's a meaningful one. Dow, the voodoo average, still holding the lows. S&P down towards that voodoo average. Nasdaq very weak. Russell showed a bit of relative strength, didn't it, holding that prior low, you know, double bottom on a micro managed time period. What we will call a swing kicker if it does a higher high. DAX, wild trading instrument, bit like the DAX, bit like the Nasdaq, you know, wild trading market. This one's actually wilder than the Nasdaq, and yeah, probably sat on the 50-month. The 200 up, saved it last time, didn't it? So yeah, big sort of pullback on that. Taking the liberty of drawing this line in the sand here. It's only an area. So where you'd expect it to sort of try and find some kind of reversal, though we don't need to predict. FTSE 100 on the voodoo average. We're missing a day for some reason in the UK. We're missing that bad day's data. 250, let's just zoom this out all the way back into this prior level here, round trip. Small caps, obviously the line in the sand's a bit lower on the small caps. Let's actually try and draw it somewhere around there. 6,000 is a good level, isn't it? And the 350, there it is on the voodoo average. So I'll just jump into these. Yesterday's theme from me was, you know, if nickel's rising, jumping on board nickel stocks might not be the right way to go. If you know, if the oils are rising, the oil price is going up. Sometimes it's better trading the oil price than it is thinking the stocks should move. The stocks made a move, and then they didn't take part when the actual oil price made its fast move. You know, very limited participation is basically, and you see it with the gold stocks all the time. It seems like I'm always bearish on these things, but I'm just a realist with it. You know, you know, if there's a fantastic setup on the gold price, well, you might as well go thinking the stocks should be twice the beta of the gold price, just because the gold price is moving. I wish it worked like that, but it doesn't. It would be easy, wouldn't it, if it worked like that? But, you know, trading's not easy. That's why it doesn't work like that. So, you know, the stocks, what were in play for us, broke out a long time ago. They went up on their own for their own reasons. And the oil price, you know, you think might help it, but it hasn't really made much difference. The stocks made the move on their own reasons. The oil price really hasn't influenced them that much. PTEL had a fantastic move, and JLP's doing okay. Not JLP, JSE. So, yeah, you know, this first retrace area here was a pretty good area to get involved. So, moving on from that, banging the drum, I've kind of, you know, been on repeat on that kind of subject for a long time now. You want to be someone who does business at the right hand edge and not someone who just chases the story to try and jump on the move and be in the last person in every move. It's move my phone away from the computer. It you know, you like a dog chasing your tail. Is if you've ever felt like that with some of these, oil was rising, why didn't I make any money? Well, that's why, isn't it? Because you're taking your positioning after the move. Commodity related is a pain in the ass. That's what we always say. That is the reality. So let's just jump through these volume leaders. I've rattled on quite a bit. It's not 9:10, just gone. We should have traded 14% to be on average volume. There'll be a few in here today. What's in here? Let's just buzz through the large caps really fast. Pull back on HS. And do you remember when they talked about the banks? We call it the story zone for a very good reason. It's usually the worst place when they're talking about it. They're feeding people what they want to read. It's usually the worst time to get involved. This game is about breakouts and pullbacks. Oil and gas. It's actually on volume today, JSE. Maybe I'll look back and go, oh, they did move finally. Who knows? But they certainly haven't really done much yet. I think there was about 6 or 7 stocks what had beat the oil price. Telecom Plus, big hard pullback on that one. And into the small caps. Quick sneak peek of what's trying to move today. Industrial metals. HMI left the station how many weeks ago now? 6, 7? Audio boom in 2020. HUR, yeah, it's a bit slow on its move, but it broke out last year and it's been going sideways and it's broken out again, hasn't it? IOG, end of 2020, over a year ago, left the station. Through the gold stocks there, not much to see in those today. Lookers expected to return to growth. Pre-tax from 2 to 86, turnover up, but kind of a lower high in the turnover. So, posted was 3,700. 3 points from 4.8. Sorry, 4,837. 4. Yeah, low high in the numbers. Obviously, we know the leaders of that sector, don't we? They made a huge move. One got bought out, so the leaders performed fantastically. So that's where we are today. It's the way risk management works is I've been stopped out of all my outliers now, and I've still got some first positions in some trades what I'm holding on to, but the outliers have compounded. The risk on my account has risen because I've been stopped out of big winning trades, and so going into the next trade, my 1% risk on account will be a lot more than it was before because of that. So the risk has gone up, but the anxiety and stress level when the market unwinds, guess what? Stops do work. You have to take these, sell decisions. You exit the market. It is what it is. The anxiety goes down as the market goes down. It doesn't go up. If you were buying more of things, 20% higher, the anxiety as they continue to go down, the anxiety levels go up, and then you start saying you're a long-term investor and of this micro-cap company, well, it doesn't make any money, and it's rumoured to have a few flakes of gold in the ground, or it's sniffed some oil in some far-off African sort of country somewhere, and there was a smell of oil in the air. It was some completely crazy story. And then all of a sudden you're a long-term holder of them, because you bought more of something what's clearly not working, and now you're on Twitter shouting how good it is. This should go up because of the oil price. I wish it worked like that. It doesn't work like that. You should be extremely. The anxiety levels go down as you get stopped out, and you look at the markets with very level-headed sort of viewpoint, and you look and see what's moving. Your eyes are the truth. I'll leave it there. Okay.